Hey guys, today we're going to explore whether dividend stocks are worth investing in. In particular, we're going to look at the advantages and disadvantages of dividend stock investing, as well as looking at what you should be doing practically to actually get started.
It's worth mentioning that when investing, your capital is at risk, and past performance is not a reliable indicator of future performance. Becoming a real investor goes beyond investing money. It's all about investing in yourself. And that's why today's video is sponsored by IG.
IG offers best-in-class education and insights to inspire confidence and help you to master the stock market. So don't just invest your money, invest yourself. We'll link to them below for you guys to check them out in your own time, and we'll share more about IG later on in today's video. If you're really enjoying today's video, guys, we'd really appreciate it if you hit that subscribe button. That helps to get our message out to so many more people out there. Let's dive straight in. So what are dividend stocks?
Dividend stocks are stocks that pay a portion of the company's earnings to the shareholders in the form of dividends. These payments are typically made quarterly, although some companies pay them on a monthly or an annual basis. The amount of the dividend payments varies from company to company and can depend on several factors, such as the company's financial performance and also the plans for the company's growth. So how does dividend investing work compared to investing in index funds?
Dividend investing and index fund investing are both different approaches for investing in the stock market, both with their own benefits and drawbacks. Right, so let's look at them one at a time. Dividend investing, it's all about buying stocks in a company that pays you a regular stream of income, with the goal that the value of that stock then goes up in value potentially over time. It requires more research and definitely more monitoring of that investment, and a willingness to accept a bit more risk, as the value of those stocks are likely to fluctuate more widely over time. Now, on the other hand, investing in index funds is like buying a basket of companies that tracks a particular index, like the FTSE 100 or the S&P 500. The goal of investing in index funds is to have broad market exposure, experience diversification, and ultimately capture the long-term growth of the stock market. Index funds require a lot less research and a lot less monitoring, and at the same time are considered to be lower risk, and as a result of that, potentially likely to generate lower returns. So let's now look at some differences between dividend income investing and investing via index funds. What's our first one?
Let's first look at risk. Dividend investing can be riskier because it involves investing in individual companies that may experience financial difficulties, causing the value of the stocks to decline. Investing in index funds is generally considered less risky because it involves diversifying your portfolio across many different companies, reducing your exposure to any one company's financial performance.
All right, so let's look at income as an area. Dividend income investing is focused on helping you to provide a steady stream of income from the dividend payments, whereas index fund investing is actually focused on the capital appreciation, i.e. you're expecting the investment you've put in, the money you've put into the index funds, to go up in value over time through capital appreciation rather than through regular dividend payments.
All right, so let's talk about diversification. Dividend investing typically involves investing in fewer companies, which can increase your exposure to individual company risks. Investing in index funds provides diversification across many companies and sectors, reducing your exposure to individual company risk.
Overall, both dividend investing and index fund investing can be effective strategies for investing in the stock market. It will all really depend on your specific goals, whether you want capital appreciation or income ultimately, your risk appetite, as well as your investment philosophy. It's very, very important, and I can't stress this enough, to make sure you're doing your own research and make sure you consult with a financial advisor if you've got a complex situation with your finances, and consider your own personal circumstances before you go ahead and make any investment decisions.
Successful investing takes know-how, grit, and imagination. And in order to get into the driving seat of investing your money confidently, it's important to invest in yourself and in your knowledge.
Absolutely.
IG offers best in-class education and insights to inspire confidence and help you master the stock market.
For example, they have courses on a beginner's guide to investing, building your own investment strategy, fine-tuning your investment strategy, and so on.
To get started with investing in yourself, check out IGM. We'll link to it below for you to get started. So what are the pros and cons of dividend investing?
All right, let's start with the pros. The very first pro is that it provides a steady stream of income. This is ideal for people who are retirees, for example, or people who are looking to retire earlier one day in the future, or simply just want some passive income. The second pro for dividend investing is that companies that pay dividends are typically well-established, stable and secure companies, and also profitable, and that can usually provide a sense of security for investors. And the final pro is that reinvesting your dividends can help to grow your portfolio over time thanks to the power of compound interest. So what are some of the cons for dividend investing?
Well, dividend payouts are not guaranteed, and some companies may choose to reduce them or even suspend them altogether if they're experiencing any financial difficulties. The second con is that companies that pay high dividends may have limited opportunities for growth or may be in declining industries. The third con is that dividend payments are typically taxed as income, which can reduce your overall returns.
All right, so let's get to the bit you've probably been waiting for. How exactly do you get started with dividend investing? There are 4 steps that we'd recommend. The very first step is for you to do your research. Cannot stress that enough, and identify companies that have a strong history of paying dividends and have strong financials as well. For example, we would suggest looking up the dividend aristocrats in the US or looking up the dividend heroes in the UK. There's a list of companies that have a track record of paying dividends. We've made a previous video on the things you should be looking for when you are researching companies for dividend income purposes. We'll link to that video below as well as above for you to head over and check it out. Now, after doing your research, the second step is for you to consider having a diversified portfolio of dividend stocks. That will obviously take some time to build up. Doing that will help you to reduce your risk overall. The third step is then to consider investing your money via a tax efficient account like an ISA, like a stocks and shares ISA, for example. Doing that helps to reduce your overall tax liability. The final step would then be to monitor your investments regularly and adjust your portfolio as you see necessary over time. So what are some examples of dividend paying stocks in the UK?
There are many different dividend paying stocks across a variety of sectors. Here up on the screen are some examples of well-known companies that have a history of paying dividends.
Yeah, we should definitely mention at this point that this is not financial advice. This is not a recommendation to you guys to go and invest in these specific companies.
Keep in mind that past performance is not a guarantee of future results, and it's important to do your own research before investing in any stocks. Additionally, it's important to diversify your portfolio and not rely heavily on any particular stock or sector.
In conclusion, investing in dividend stocks can provide a steady stream of income and a sense of security for us investors. But it's also very important to understand the risks associated with this type of investments as well as the limitations as well. Note that although the goal of investing your money is to grow your wealth over time, your capital is actually at risk. And as Mary said earlier, past performance is not a reliable indicator for future performance.
By doing your research, investing long term, diversifying your portfolio, and monitoring your investments, you can make informed decisions and potentially reap the benefits of dividend stock investing.
Guys, we'd love to hear from you guys in the comments. Are you a beginner investor who's curious about dividend stock investing and you've got questions about it? Jump in the comments and let us know, and we'll come back to you with those responses. And if you're someone who's already investing in dividend stocks, we'd love to hear from you in the comments as well. What stocks are you currently investing in, and what resources have you found really helpful for dividend income investing? Please jump in the comments and share those resources with our community. And don't forget, if you really enjoyed it, we'd really appreciate it if you hit that subscribe button, as well as like the video whilst you're there as well. Thank you guys so much for watching today's video, and as always, in all things, be thankful and seek joy.
Take care,
people.
Guys.
Bye.